Welcome to Get Rich Education. I'm your host, Keith Weinhold. Today, we're talking about how a measure to expand rent control got defeated. Then, we're discussing a place where you can find both real estate appreciation and steady cash flows, where the population is growing twice as fast as the national average, and there's no state income tax and low property tax. Today on Get Rich Education. MC Laubscher is the host of the Cash Flow Ninja podcast and president of Producers Wealth. He is on a mission to help you achieve financial independence and freedom as soon as possible. He achieves this by integrating the infinite banking concept with real estate investments to increase your returns and recapture cash flow that you are not even aware of that you're losing. MC shares the number one strategy of investors in his Holistic Wealth Creation course at yourownbanking.system.com. Finally, Total Control Financial gives you checkbook control of your 401k and IRA money to invest in real estate. It's time to get your retirement money into your own checking account, but you've got to avoid the little-known tax that you'll pay with any self-directed IRA. Instead, it's time for the QRP. Learn more and get your free copy of the QRP book by text messaging QRP in all capital letters to 72,000. Get Rich Education is brought to you by Ridge Lending Group, Producers Wealth, Norada Real Estate, and Total Control Financial.
You're listening to the show that has created more passive income for people than nearly any show in the world. This is the powerful Get Rich Education.
Welcome to Get Rich Education. I'm your host, Keith Weinhold, and you are back in the land where financially free beats debt-free. Last week, America's longest-running investment conference, the New Orleans Investment Conference, wrapped up. I was in attendance there in New Orleans, Louisiana. And just to give you a quick summary of only a scarce few of the presentations that I attended, I want to let you know that repeat Get Rich Education guests Robert Kiyosaki and Tom Wheelwright presented there on the main stage, and Tom reminded us that due to changes in the Trump tax plan, real estate investors are now the one with the best year one tax breaks. They're finally even better than direct oil and gas investing. He also told us that the U.S. now has better tax depreciation rules than any nation in the entire world. Robert Kiyosaki drew the cash flow quadrant up on the pad and the easel, and he reminded you that on the left side of the quadrant, remember that? That's where employees and the self-employed are. Debt is seen as bad. On the right side of the quadrant, which is where business owners and investors like you are, debt is actually perceived as good. Peter Schiff, who is really a perma-bear, permanently a bear, his presentation to the New Orleans Investment Conference attendees was called, "Is the Trump Boom for Real?" And in a word, the answer is no from Peter Schiff. Although we do have low unemployment, he reminded us that recessions nearly always begin when we're in this condition of low unemployment. He told us that we are in a big, fat, ugly bubble. Trump is borrowing more than he ever has, and we now have the largest trade deficit with China that we've ever had. Schiff even goes so far as to say that the Fed must reverse course and lower interest rates back down to zero, and then they must start printing money again with quantitative easing number 4. He says that the dollar is going to lose its status as the reserve currency of the world. He's actually been saying that for a while, so it's pretty much always dour economic news that we get from Peter. Now, I don't talk about stock investing very often, but I did attend Mark Skousen's presentation. Mr. Skousen is the founder of Freedom Fest, and he's been named as one of the 20 greatest living economists of all time. I decided to listen to him because he's just got a great presentation style. He's really wide open and funny. And much like Mr. Wonderful Kevin O'Leary on Shark Tank, Skousen focuses on the production of income, at least. And he does that with dividend-paying stocks. Now, I definitely do not purport to be any kind of stock picking show, but his 4 stock picks, real quickly, all of which provide a healthy dividend, are Main Street Capital, Omega Healthcare, which is actually a REIT, enterprise products, and finally, one that you've heard of, it's Microsoft. I'll put those 4 ticker symbols in the show notes for you. I have got to thank you, the listener, for coming to one, or some of you coming to both of my meet and greet sessions there at a booth at the New Orleans Investment Conference. I even had some laminated infographics on the 5 ways that real estate pays you and some other goodies to give you there. It was so fantastic to meet a bunch of you in person. Now, since the conference ended, we had last week's midterm election results and some other news. And one interesting election result that was real estate investing related was where California voters rejected a measure that would have expanded local rent control authority on residential property. Thank goodness. Now, there in California, both sides spent major cash on this campaign for this ballot measure. The pro rent control side and the anti-rent control side both spent a lot. Now, the side trying to prevent rent control, they were backed by the California Association of Realtors and New York-based real estate private equity firm Blackstone Property Partners. The other side, which was trying to expand rent control and cap the amount of rent that you can charge, was the California Democratic Party, the California Nurses Association, the California Teachers Association, and the ACLU of California. But last week, election week, California's Prop 10 was defeated. Yes, California voters crushed this measure that would have broadened rent control, and it was by a margin that wasn't even close. It was about 62% to 38%. Now, suppressing rent control, this is a good thing for landlords, investors, property owners. It's a good thing for the construction industry, and it is even a good thing for tenants. Yes, I said that rent control, putting a limit on how much rent you can charge, would actually be bad for tenants over the long term. Rent control halts new construction projects, and that can make the lack of affordable rental housing problem even worse. And there are so many other deleterious downstream consequences for those renters with rent control. So the fact that this was defeated is all good news for you. Even if you don't own rental property in California, we don't want rent control to win favor and spread in the United States. We want it to continue to be suppressed. Now, there's almost no history of rent control in all the places where we favor buying, which are typically in the Midwest and South. In the few pockets where rent control does exist, it's largely in the United States Northeast and the California coast. And you might remember that I dedicated an entire episode to rent control 22 weeks ago here in episode number 192, and how it has a lot of negative downstream effects that you often just don't consider. Now, in other real estate news from last week, Amazon is now widely expected to name 2 new headquarters locations, not just one. And the cities that Amazon expands to is expected to boost housing prices in the chosen cities. New York City and Washington, D.C. appear to be the frontrunners to add to Amazon's current Seattle headquarters. Amazon employees, they basically fall into 2 categories. You have low-wage warehouse employees, and then you have high-wage, what we'll call knowledge workers. And the jobs at the 2 new headquarters are expected to be concentrated in the higher-wage knowledge workers category. Now, earlier this year, I made visits to a number of real estate markets, meeting with the rental providers and their property managers, and then walking inside the investor properties with the provider in these investor advantage markets. And there's one particular real estate market that I specifically made sure to visit because they're getting both cash flow and at the same time, they've been experiencing appreciation of 6%, 7%, 8%, and even 9% in some neighborhoods. So we're talking about a metro area that's seeing population growth that's double the national average. It's got good infrastructure, good climate, low taxes, and all of this has conspired in a very low unemployment rate across broad economic sectors in this particular market. But yet housing prices here are still 27% below the U.S. average in this market that I visited. And now we really have so many ingredients for long-term real estate profitability all in one place. The provider has been doing business in this particular market for 8 years. And I'll share with you that I bought a few properties in this market myself from this very provider this year. For all those reasons and more, we're going to talk with them, and where that is next, you're listening to Get Rich Education.
Would you like to know the easiest way to create wealth and passive income with real estate? This is Marco Santarelli with Norada Real Estate Investments. Now you can access the best deals without the stress or hassle of having to find, renovate, or manage those properties. We save you time by providing you with passive income investment properties in some of the best U.S. markets. Learn more by downloading your free copy of The Ultimate Guide to Passive Real Estate Investing. There's no obligation and nothing to buy. Simply visit passiverealestateguide.com and get your free copy today. That's passiverealestateguide.com.
For a real estate investor like you seeking an income property loan, go to Ridge Lending Group, NMLS 42056. Over the years, you've heard President Chaley Ridge generously devote her time to you here on the show as a guest. Ridge provides investment property loans in most U.S. states, and you're going to find out how they've helped more people realize their dreams of real estate financial freedom than any other mortgage lender in the entire nation when you get started at ridgelendinggroup.com.
This is Rich Dad Advisor Tom Wheelwright. Listen to Get Rich Education with Keith Weinhold and don't quit your daydream.
Well, I really look forward to discussing Tampa. Colin, welcome to Get Rich Education.
Hey, Keith, good to be here.
Colin, we talk about investing in a turnkey property for the production of cash flow. You've established your business in the state of Florida. So before we talk about why Tampa, just why Florida, first of all?
Sure. You know, the reasons I invest in Florida as a landlord are different to the reasons I live here and raise my family here. I mean, the reasons people might want to look at Florida as an investment destination, I'll give you 3 or 4. The first one and the biggest one is that population growth here is more than double the US average. You know, passed out New York as the third most populous state about 4 or 5 years ago, and it just hasn't looked back. And if you can kind of invest somewhere where the population is increasing quickly, you're really making things a lot easier for yourself as a landlord, because that increase in population is going to get more demand for rental properties. It's going to boost the rents you're going to get every year. It's going to boost the values of the houses as well when you've more people coming. So that's the first point. Second point is that Florida has an extremely low unemployment rate. It's really a job creation machine. You know, unemployment, I think, is about 3.7% now. Third point is that Florida is the only state east of the Mississippi that has no state income tax, one of only 7 in the country. Property taxes in Florida are also extremely low, so that's a big help as well. Finally, Florida is a very landlord-friendly state. It's not like California. It's not like New York. This is a pro-landlord state, and if you tick the right boxes, you are not going to have any problems with tenants in here at all.
You can get a fairly quick eviction there in Florida if it did come to that. And yeah, just the economics 101 of supply being outstripped by demand there, and the fact that Florida has a population growth rate more than double the U.S. average is a positive dynamic. Now, if you're not familiar with Florida, Tampa is, about halfway down the west coast of Florida. And Colin, why the Tampa MSA of all places within Florida?
For me, Tampa is the right kind of size in Florida. Obviously, you've got Orlando, you got Jacksonville, you got Miami are the other big ones. Tampa's like one of the top 20 MSAs in the US. It's a pretty big market in its own right, more than 4 million people. So pretty much twice as big as Orlando and Jacksonville. It's also had a population that's exploded, 28% growth from 2000 to 2017. It's an extremely affordable market, 26% below the US average. So when you have that mixture of fast population growth, houses that are very affordable, a strong and very diverse economy that creates a lot of jobs, it's just a great market to invest in. I mean, it is a beautiful city. It is a really nice place to live in. But the reason we invest here is because of those factors: job growth, affordability, population growth, and the infrastructure is great. Whether it's road or air or water, you have 2 very important ports here, you know, both for military. The MacDill Air Force Base in U.S. Central Command is here. It's also got an extremely important port, commercial port, one of, I think it's the 7th biggest in the country. Road infrastructure is great. You're not getting the traffic jams I've seen in LA or the Bay Area or New York for that matter. And it's just a super popular relocation destination for professionals. I'm not, you know, a lot of people think retirees come to Florida, and they do, and for lots of good reasons. But the reason we invest here is because it's a top relocation destination for professionals. They're coming here for the jobs, they're coming here for the affordable housing, they're coming here for the quality of life.
It's astounding how many boxes are checked there for an out-of-state investor, and part of those magnets that are drawing people in: low property tax, no state income tax. You've got good proximity to some of the best beaches in the United States. But yet, where you're buying most of the turnkey properties there for investors, they are a few miles inland. But when we talk about a market that's positioned on the Gulf of Mexico, some of us think about hurricane concerns. So just talk to us about how an insurance policy for an investor would cover their property for hurricane damage.
Are a fact of life on the Gulf Coast of Mexico, whether it's Florida or Louisiana or Texas. And thankfully, I mean, when you see hurricanes on the TV, you're looking at the newscasters on the pier about to get blown off it. That's not where I'm buying. I'm buying about 6 miles inland. I'm buying concrete built houses. They're not even in flood zones, Keith. They're in elevated concrete subdivisions miles away. And what you can do if you ever did own a property that was in the path of a hurricane, there's a lot of steps you can take to mitigate it. If you're that far inland, you don't really need to worry about floods. There's no storm surge coming 6 miles inland in an area that's not in the flood zone. So you need to worry more about wind damage. And wind damage is kind of specific to big trees near your house. So you need to make sure branches are cut back from your roofs, that there's no big branches hanging over your roofs to cause some damage there. You need to make sure the gutters are cleaned out a couple of times a year, which property managers do here. And if there is a hurricane coming, unlike an earthquake or a tornado, you have about a week's notice at least. So communications with tenants comes into play there, where you're making sure that they're not leaving any objects surrounding the house, whether it's patio furniture or toys or bicycles, that they're all brought inside the house. So you can mitigate a lot of that. And obviously, very importantly, hurricane are totally insurable. I mean, any of the pro formas I quote to our investors include generally about $1,000 a year for insurance, which covers your liability, your fire, your theft, your damage, and also hurricane coverage. So you're covered insurance-wise. And, probably most importantly, Tampa is actually in quite a privileged position. The majority of hurricanes that come this way either go up the East Coast, the other side of the state, and go into the Atlantic, or they go up the Gulf of Mexico, but they're not hitting Tampa, which is kind of halfway up Florida. They're veering west before they get to Tampa, and they're hitting Louisiana or Texas, or, if they're unlucky, that the Panhandle, like happened a few weeks ago, that was like 450 miles from Tampa. That's like a storm in San Francisco when you're living in LA. It's just totally different market. So Tampa's got a pretty privileged position. Irma was a big hurricane that hit last year. That was a Category 4 hurricane. But again, because our houses were so far inland and because we'd taken those steps that I just mentioned, it really didn't cause any damage at all. I mean, we'd no homes that needed to be, where occupants needed to leave. We'd some debris in some yards. We'd a couple of fences to put back up again. And that was the first hurricane that hit directly since the 1920s. So this isn't a frequent occurrence in Tampa at all. And touch wood, it'll continue that way. But it's something that's very easy to mitigate and insure against.
Yeah, I swear some of these weather anchormen that go out into the field to report are going to be swept away in the storm surge one of these days. They just keep pushing the edge there to get that media coverage. Yeah, interestingly, Colin, and it's something that I learned when I was buying my own properties from you there, is that during the home inspection process, one of the specific forms and reports that your home inspector does is they fill out a wind mitigation report. And I get to see that wind mitigation report as part of my inspection package since I bought an inspection. And that inspector also makes sure that the wind mitigation report ends up getting sent over to the insurer so that they can go ahead and adjust down your insurance premium due to that wind mitigation report being generated.
Yeah, that's exactly right. Your insurance provider will want to look at your third-party report, which will cover a lot of detailed information on the roof, and that helps you get a lower insurance premium. And like I say, Florida insurance premiums are actually very, very reasonable. If you're outside of the flood zones, which all of our properties are, insurance is very, very reasonable, and that includes hurricane insurance.
Just tell us about some of the sub-markets that you go ahead and choose to operate in there. Tell us about the appreciation rate that you've seen in your sub-markets and then their character.
Sure. I mean, Florida is one of those kind of lucky, privileged states where you're getting both very good cash flow and very good growth. Normally it's one or the other, but Florida is one of the few. I mean, I'm sure there's a couple of others, but Florida is one of the few where you're getting both. So We've been seeing consistently for the last 6-7 years annual growth of anywhere from 6 to 9% a year, which is terrific. And when you think about the annual equity growth in a lot of the properties I sell is equal to your gross rent. So if your gross rent is maybe $12,000-$13,000 a year in a $135,000 property, you could get that much again with growth. So we target the lower middle class areas. They're the ones that tick the boxes for me in terms of having the stability, the safety, the resilience, the right kind of mix between tenants and owner occupiers. Ironically enough, the places that make the best rentals for passive investors are the ones which are dominated by owner occupiers. So we buy in areas which are about 65% owner occupiers, 35% renters. We avoid the high-end homes. I'm not buying pool homes, not buying newer homes with the vaulted ceilings. I'm avoiding the lower homes. I'm avoiding multifamilies and old apartments and timber frame houses. I'm kind of in that middle range, the $120,000 to $150,000 range. That's what gets you a good quality home in Tampa, and more importantly, gets you good quality tenants. You're avoiding the kind of Section 8 tenants, lower income tenants that can come with more maintenance and vacancy headaches. But you're also maximizing your cash flow, because if you went up market and bought a $300,000 house, you've twice the expenses as a $150,000 house, but you're certainly not getting twice the income. So we're in that sweet spot in the middle. And there's a couple of markets, usually about 30-35 minutes north of downtown Tampa, places like Holiday, Newport Richey, Port Richey, where you get a lot of these really solid concrete block houses in elevated areas where you're getting really good quality middle class, lower middle class tenants. I'm talking about people that work in school teachers, nurses, other hospital staff, people that work for the local county, retirees, police officers, firefighters, just a lot of people earning $50,000, $60,000, $70,000 a year that just like these areas. Because if you want a house, like a 3-bedroom, 2-bathroom house with a backyard and attached garage, and your budget's $1,100 to $1,300 a month, these are the areas you're going to go to. You're not getting them in downtown Tampa. You're not getting them in downtown St. Petersburg. You're getting them in these northern suburbs. The Tampa is moving northwards and westwards. So we're very much in the path of the natural progress of the Tampa population. And pretty soon it's going to be just one huge, big urban area. And that's where you want to be.
I feel that when I'm there, I see a lot of construction. So we're talking about detached single-family homes, and what you're doing there in that market is really just so representative of what happens in a lot of markets. You avoid the $300,000 single-family home because rent incomes do not rise proportionally to that higher price point for the assets. So a $300,000 single-family home might often generate a rent income that's only 0.6% per month as a proportion of the purchase price. When these $150,000 and lower properties, you're often getting 0.8 to 0.85 for a rent to value ratio, and that's the profitable formula for real estate investors. So we're talking about oftentimes these are detached single-family ranch homes. Many of them have open floor plans. And when I was walking the properties with you earlier this year, I noticed that many of them have a Florida room. Tell the listeners what a Florida room is for those that aren't familiar with it.
The vast majority of properties out here have them. A Florida room is really an enclosed porch, usually an enclosed back porch. Sometimes you get two of them, and it's what people use for 6 or 7 months of the year. Around now, when the humidity is down, when the rain is gone, they're just really nice places to sit outside, relax, have your barbecues, watch the ball game. It's just a typical thing to do out here. And like you say, these are concrete homes. And what we do with them is a lot of them are what I would call old lady nice, just nice old homes that haven't really been updated for a long time. And so we're putting in new roofs, new ACs, new floors, new kitchens, new bathrooms, doing a little bit of landscaping, new privacy fences. And for about $130,000, $135,000, you can get like a fully renovated home that'll rent for about $1,100, $1,125 a month. So that's your 0.8, 0.5 rent ratio you mentioned. But just as important, you're in a fast-growing market. You're buying in an area where prices are increasing very healthily and not really showing any signs of slowing down at all.
So then your typical property, the median one that you're offering there, has how many beds, how many bathrooms, the one-car garage, and then how much square footage?
So a typical one would be 3 bedrooms, 2 bathrooms, an attached one-car garage, a backyard, and would be anywhere from 1,200 to 1,500 square feet. And the price would be anywhere from $120,000 to $150,000.
Your business model is to go identify properties that are distressed or they're in foreclosure, to purchase them, to renovate them, to sell them to an investor, and then, of course, they are tenanted as well. So you've described the extent of some of those turnkey renovations. When that turnkey renovation is complete, just talk to us about how the provider and the manager walk that property together and then the handoff to the manager.
So we work very, very closely with well-vetted local property managers that have been managing my personal portfolios for years. And I'm very careful with who I work with, because really a property manager's got my reputation in their hands. They can turn a great property into a terrible investment and vice versa. So they're very good at vetting applications. They probably turn down 11 out of every 12 applications. They're super thorough with verifying the income, doing the credit checks, looking at the rental history, making sure there's no criminal records there. They spend a lot of time talking tenants through the leases page by page by page, informing them of all the house rules and all their obligations that they're expected to meet, and really just training them how to be good tenants. And the majority of people, when you give them a good house and you treat them with respect, they are good tenants and they will hang around for several years. So fully 75% of the people placed in these properties renew their leases. The typical lease term is 1 year. Florida's got a very diverse demographic, which makes it great for landlords. So you could be renting out to retirees, you could be renting out to millennials, could be families with kids. It could be a lot of different types of people. And there's demand for every kind of floor plan out there. Rental demand is just going through the roof across every category.
And Colin, you're the one that represents that rent amount to the investor and lets them know what that rent amount's going to be. And I don't know anyone that knows more about how much a market rent should be in those submarkets and in those properties than you. So you let us know what that rent amount's going to be. Now, if you're dealing with some unscrupulous provider, think about how they could just put any tenant in a property, even that's unqualified, and tell you, the investor, hey, you should buy this property for $150K because I'm getting $1,300 worth of rent in it, if they've just put in any tenant that's not qualified. Well, they're inflating the market rent above what it really is, when instead in that property, it might only command an $1,100 rent when you have a qualified tenant in there and it's being represented appropriately for that particular purchase price.
I couldn't agree more. I mean, you're right. We've bought maybe 250, 300 properties in a pretty small area, maybe 10 miles tall by 3 miles wide. So we know the market rents intimately as well as anybody. And we're in the fortunate position where the market rents are more than enough to give you a generous cash flow. They don't need to be exaggerated. I would never exaggerate market rents, because you're never going to get a good quality tenant if you do. Because I'm dealing with investors, I'm dealing with people that refer us to their friends, I'm dealing with people that buy properties from us every 3 or 4 months. It's in nobody's interest to inflate rents. And it's any good property manager that wants to create a business that grows naturally wouldn't do it either, because they're not making their lives any easier by putting unqualified tenants. They're just creating a lot of work for themselves to manage existing tenants. It's that 80-20 rule again. They're going to be spending 80% of their time dealing with these tenants that were placed paying too much rent. So we avoid that at all costs. We don't need to, and we never would. I mean, we're all about customer service, and like I said, the market rents in these areas are more than enough to keep investors happy.
A provider could not stay in business if they grossly overestimated the rent amount like that. And you've been in business just in this market for 8 years.
Yeah. I've been in business in real estate for 16 years, a lot of different markets in the US. I've experienced overseas as well. You can tell I've an accent. I'm from Ireland originally. So I know a couple of different markets, and that gives a good perspective as well. And I was been around the block long enough to know that I've got a good market when I see one, and myself and my business partners are here in Tampa. We've all got our families and our kids here, and it's a great place to live, but it's a great place to build a business, a sustainable long-term business. And we're just lucky. A lot of your listeners are maybe living in markets where it isn't so easy to build affordable rental portfolios, where you can in Tampa. And, if you do a good job and you target the right kind of subdivisions, you'll be kept busy as long as you like. So my main job is finding deals. I'm on the foreclosure auctions. I'm networking with wholesalers. I'm going to RIA meetings. I'm looking at what's going on the MLS. So I love doing this full time. I'm very lucky that I'm in real estate full time. It's a great time to be doing it.
It is. Do you have any last thoughts on the timing of passive real estate investing today?
I do, actually, yeah. I mean, a lot of your listeners might be thinking that they're 5 years late to the party, that they should have been building their rental portfolios back in 2012 or 2013 or 2014 when prices are lower. But I think what you need to bear in mind is that we're in a very, really interesting part in the market cycle now. And bear in mind that for large proportions of the population, it is extremely difficult to get a mortgage, not just a mortgage to build a portfolio, but even just a mortgage to build your primary residence. The lending criteria is way stricter than it used to be. And I'm not talking about 10 years ago when it was just silly. I'm talking about 20 years ago, 30 years ago. If you don't have the right kind of credit score, the right kind of job, the right kind of credit record, you're just not getting a mortgage. And that applies to a lot of good, hardworking people. So those folks are now renters. A lot of them, if you can't get a mortgage, you're obviously going to be renting. So that's point number one. Point number two is that you have a lot of the population that choose to rent. I mean, the millennials are the obvious example that are buying homes in their late 30s or early 40s instead of their late 20s, which their parents were doing. But you also have older people, retirees, that are downsizing, that are choosing to rent because they don't want to deal with roofs and ACs and water heaters. And you've got low inventory. So when you have that mixture of a lot of people are renting because they can't get funds to buy a house, a lot of people are renting by choice, and you got low inventory and fast population growth, it's a wonderful time to be a landlord. If you can find a good provider and if you can get yourself a good solid house that's been well renovated, you kind of just need to sit back and let the market do the rest. I mean, you've talked many times, Keith, that it's the cash flow is one thing, but you're doing it for the equity pay down. You're doing it for the equity growth. You're doing it for the inflation hedge. You're doing it to get those tax advantages. So I don't know what else you're going to, if you have those funds in the bank, where else are you going to get all those benefits if it's not real estate? So it is a good time to buy right now is what I'm trying to say.
Yeah, I've talked about much of the same thing. I think in general, 5 years ago was a better time to buy investment real estate than it is today. But yet the question begs, well, yeah, if you're not going to put your money in investment real estate where you potentially have all 5 of those profit centers, then where else would you put it? And for sure, anyone that's tried to qualify for income property in the past few years knows that it's still not easy to get a loan. Well, Colin provided you with a great report on Tampa MSA turnkey investing. So I really suggest, if this potentially interests you, to go to getricheducation.com/Tampa, opt in for that really colorful and really well done report that Colin's put together. It might take a few seconds to download it. And then from there, you can connect with a provider. Colin, it's been great having you on the show.
My pleasure, Keith. Thanks very much. Hope to see you in Tampa again soon.
We're talking about a market that's experiencing some measure of both appreciation and cash flow there in Tampa. How long will the appreciation continue? Well, of course, nobody knows. But how long will the high population growth continue in Florida? Probably quite a long time. And there are now more than 21 million Floridians. You just look at the decade over decade censuses, and for such a long time, for generations, you've seen Florida's population growth outstrip that of the nation, and there's every indication that that's going to continue. The provider seems to have about 3 new properties available each week, sometimes more. Interestingly, you might like to know that they keep in touch with their investors with a podcast. Isn't that cool? To learn more, grab the free investor report and connect with a provider. It all begins for you at getricheducation.com/Tampa. Until next week, when I'll be back to help you build your wealth, I'm Keith Weinhold. Don't quit your daydream.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Get Rich Education, LLC exclusively.
As America's 3rd largest city, Chicago, Illinois has big economies of scale for real estate investors. But there are problems with investing in highly taxed, fiscally strapped Illinois. You can beat it when you invest in Chicago land, staying on the Indiana side of the state line. Your property tax on a median Indiana home is less than half that of an Illinois property. Forbes ranks Indiana as one of the top 10 states to do business. With typical rents at $1,250 and purchase prices at $125K, Northwest Indiana numbers work. Learn more and connect with the turnkey provider at getricheducation.com/Chicago. That's GetRichEducation.com/Chicago.
71% of Americans aren't saving enough for retirement. It's going to get worse as people live longer, and you need to start thinking differently. But you can't lose your time. Real estate is the investment vehicle that's made more ordinary people wealthy than anything else. Keith Weinhold of Get Rich Education is host of one of America's top investing shows, Disrupting Wall Street. He's an international best-selling author, a writer for Rich Dad Advisors, and has been an active income property investor since 2002. He has created thousands in passive monthly income for countless followers, and now he has a free book, The 7 Principles for Creating Wealth in Your Life. Get your copy now at GetRichEducation.com/book. That's GetRichEducation.com/book. Because invest in what produces income for you now and later. Sign up now at GetRichEducation.com/book.
The preceding program was brought to you by your home for wealth building, GetRichEducation.com.